Welcome to this week, and what a week it has been. We have moved to our new Sunday time slot, which is exciting as we will not be competing against the Stanley Cup playoffs. Are any of you guys excited about hockey this year? I mean, do you plan to grow that playoff beard until your team loses? Kind of makes me think of the Gillette board of directors being annoyed at slumping sales in NHL cities, during the start of the playoffs. At least every round, they end up gaining half of those sales back. So that's kind of cool. Today, we have a great show for you. There have been lots of news this week, and we have boiled it all down to three topics. So this afternoon, we will be looking at the negative GDP in the States and the implication this has on possible recession. We will also be looking at our good old buddy, Elon Musk, and figuring out what the banana bread Elon is up to this week. We could actually almost call that a regular occurrence on the show. What the banana bread is Elon up to this week? Finally, we have had a week of earnings reports. We're going to take a quick look at the winners and the losers. However, before we get to all of that, let's say a quick hello to the chat. And I guess to the chat, I mean to Jordan. Hey there, Jordan. How are you doing? And Jordan does not follow hockey. That's kind of cool. Yeah, it's just one of those things. I think one of the big motivations with moving the show from Saturday night is just a lot of people, told me that they just have stuff they do on Saturday night, so they can't catch it live. So by moving it to Sunday, it gives us just a little bit more freedom. And of course, people can still catch the replay, so it's not a big deal, which is kind of cool. All right. So, well, if we don't have a lot in chat yet, and I'm kind of expecting chat to be a little bit slow tonight. I keep saying tonight, I should say today, as there's probably people who showed up last night going, wait, where's the stream? Jordan says you're doing well today. Thanks for asking. Hope you're well also. Yes, I am doing fantastic. All right, well, let's just jump right into the content, and we'll talk to people as they come in. So for any of you who have not heard yet, the US experienced a pretty rough first quarter for 2022. So their gross domestic product, or GDP as the cool kids call it, dropped 1.4%. This is bad because with all of the indicators pointing at a potential recession, this is kind of a big one. One of the key things you determine if we are in a recession is 2 consecutive quarters of GDP decline. We now have the first one, and the friggin' Oracle made it into. There we go. Good to see you, Ken. He was out driving and doing a stream for an hour before this. So that's kind of interesting. So back, of course, to talking about the GDP decline in the States. So it's interesting. There are a lot of different indicators for a recession. And I have determined that I have my favorite indicator of all time for a recession. And that is an indicator called the Men's Underwear Index. So apparently, underwear is the last thing men will stop buying in the hard times. So if they stop buying underwear, we may have a recession as they recycle their old undies instead of buying some fresh ones. I'm not actually sure where this index is found. I am told it is real, but I can say that the price of Hanes stock has dropped from $17.58 to $13.26 over the last 6 months. That is certainly something that makes you go, Now, I've said before that we currently have a perfect storm that really seems to be moving us towards a recession. We have supply chain shortages. We've got high inflation. You could even argue that it's almost runaway inflation. We, of course, also have the overall disruption from the illness and all of the money dilution from all of that money that they printed. Well, dear banana bread. Add that to the war in Ukraine and the effects we'll have on the food supply, just to name one. There's also a lot of different minerals as well that are prime exports from Ukraine. So it's a mess, really. The interesting thing, though, is the Fed actually hopes to solve all of this inflation issues by simply raising interest rates. That will help a little, but honestly, interest rates will not solve the supply chain issues, or heck, I've never heard of an interest rate stopping a war. We will have to live with higher inflation until those issues are resolved in a more permanent way. And Jordan says, that's odd considering I buy undies maybe once every couple of years. I mean, that's as infrequent as it is. Oh, okay. That's a little bit different. Oh, and look, it's Mr. Red Taco. So Mr. Red Taco was sort of in a short that I did yesterday because I happened to mention his name in that clip that came out. So that was kind of fun. We got Lily in the house saying hi. That's absolutely fantastic. Now, going back, of course, to the U.S. economy, one of the other aspects to this is that they aren't technically in a recession yet. So we need to get that second quarter in decline to be able to officially say, okay, yeah, we're going into a recession. There's also a body that is responsible for declaring that we're in a recession. So they have to declare that too, but it's almost a foregone conclusion if we get that second negative GDP that we're looking at a recession. However, some are actually arguing, and we're talking economists, that as long as demand remains high, and it is, there's a high demand right now, and the labor market stays strong, the US should actually bounce back in their second quarter. So that's what people are thinking. So if that's true, then we're not yet on the cusp of a recession. It's still coming. But here's another interesting little thing. So Canada had positive GDP growth in our first quarter. So Canada had an increase of 0.5% in our GDP. That translates into 5.6% increase on an annualized basis. This is actually very big considering the Bank of Canada was expecting no more than 3% annualized increase. So we have outperformed the Bank of Canada's expectations. Of course, the Bank of Canada is saying, oh, it's because we raised interest rates. But that's to be seen. But here's an interesting thing. If we are doing so well in Canada, it does make me think the US may have a chance of staving off the recession a little longer. I've no doubt that one is coming. And I would, if I really had to say when, I would say either late this year or earlier, say early to 2023. That would be my best guess. I mean, what do you guys think when it comes to a recession? When are you guys, what are you guys planning? Are you taking any kind of precautions? You know, is it changing the way you're handling your investing? So interesting, a couple interesting questions. Oh, we got Mountain of Inspiration in the house. Now, Mountain of Inspiration has a channel. He's got a nice little channel. I was over there the other day watching a couple of his videos. So definitely somebody to check out. If you know his content, if it resonates with you, you'll thank me later. So that's kind of an interesting thing. Okay, now I guess if we don't have a lot to talk about, I can move into our next topic. We're moving through these topics really fast. I have 3 topics, people. If we run out of topics, then it's going to be a situation where I'm just going to be talking about anything, and that actually could be fun. So let's move on to our next topic, and we will see what in the banana bread is Elon Musk up to this week. So if you guys remember, those of you who were here last week, we were talking about Elon. He was in the 3rd place last week. This time he's moved up to 2nd. So he's starting to dominate the news. And actually, to be in all honesty, if it was anything a little bit lesser than than a negative GDP, I probably would have put Elon in first place. So he came close to taking first place. So, and just give me a second. My mouth needs a little bit of water. Perfect. So Elon came close to becoming in the first place. So what was going on with Elon this week? Last week we talked about him, and he was hatching a new plan to try to buy Twitter. And, because Twitter had already done the poison pill and they were trying to stop him. But honestly, he threw enough money at it that, well, his plan to buy Twitter has been successful. So Twitter came to an agreement with Elon, which is going to see Elon pay in total $44 billion. And I guess that will give him the title Tweet Master General. That's actually good. If I should tweet that to Elon because he might actually like that. But that works out to $54.20 per share, which is fantastic. Now, here's the thing. It's basically he's only paying that money to people who held a share as of the date of the initial announcement. So if you run in there now and start buying up Twitter stock at 40, whatever it is right now, 44, 45, you're not going to be paid back $54.20. You're going to be paid what you paid for it in that situation. So you had to have held the shares when this all happened. Let's see. And Lily says, I'm honestly not convinced that we will end up in a recession because the thought that there is so much demand, but inflation may cause the demands to shrink, at which point, if we end up in a recession. I don't think we're going to go into a recession right away. But it is a valid point. But a recession is absolutely a normal part of the economic cycle. So we're going to have recessions. There's no and ifs or buts about it, but it comes down to when. And we got a situation where the government may just decide we're just going to start throwing money to prevent a recession. But that's only going to make it worse in the long term. So it's going to be very interesting, I think, in regards to the recession. All right. Now back to Elon, though. Okay, so we just talked about Elon decided this week that he was going to try to get a judge to throw out part of his settlement in 2018 with the SEC, which basically means Elon is not allowed to tweet without having somebody approve it. So he's got a tweet approver, and Elon's trying to get rid of them. So he took it to court this week, and, well, he lost. Wow. This is the thing that baffles me. He has somebody who's preventing him from making dumb tweets, but yet this week he tweeted out that he was planning to buy Coke so that he could put cocaine back in the pop. And I'm just like, seriously? Holy banana bread. What is this person doing? I'm almost thinking that whoever his approver is, that they're only looking for one thing. And I think what it is, this came from an SEC case, I'm thinking they're only making sure he is not tweeting something that can influence the market. So when he tells stupid jokes, I think they're letting them through. I think it's just if he were going to say something about, let's say, Dogecoin that would cause a flurry on Dogecoin, I think those are the ones that are stopped. Because if you've noticed, it's been a long time since Elon's has said anything that's really impacted the market. And I think that's because they're filtering it there. But okay, so we've had all of this other stuff with Elon. So surely the Elon news should be over at this point. Well, it isn't. And the reason for that is exactly what Redbeard's World says. Elon never seems to shock me. And Jill says he was joking. Yeah, absolutely, he was joking. Elon has no intentions of buying Coke and putting cocaine in it. It was just humor. I got the joke. I thought it was kind of funny. But, I was just surprised that they let him get away with it. That's all. Okay, so how it continued at this point is with poor old Elon. he needed to come up with some money because he has to pay Twitter $44 billion. So starting last Tuesday, he basically spent 3 days selling Tesla stock. And he didn't really tell people exactly what was happening initially. So he went on a 3-day selling spree. And interesting, Tesla, of course, plummeted. Now, he sold roughly $8.5 billion worth of Tesla shares. So that's a lot. And of course, everybody is pretty sure he's doing that because of Twitter, and that's fine. Now, most of the selling happened last Tuesday, and the big chunk he sold last Tuesday caused Tesla to fall 12% as a result. Now, Tesla hasn't really recovered yet since all of this happened. There was a little bit of recovery, but it has put Tesla in a good situation where you could conceivably look at Tesla as a long-term, perhaps, buy. So that's something to think about, something to do research on for sure. Now, I still have more Elon news. I only have one more piece of Elon news. Before we do that, Mr. Red Taco says $44 billion is a lot of Coke cans. Yeah, it sure is. It sure is. So the last bit of news that we have on Elon is, and this is technically more Tesla than Elon, but we know that Tesla is planning to do a stock split. Now, that stock split won't be voted on by the shareholders until October. So it's a little ways off, but there was a leak that came out. So anything that's a leak, you need to take it with a grain of salt. But the leak basically said that this stock split is looking to be 20-1. So that means that if you own 1 share of Tesla, after that stock split, you would have 20 shares of Tesla. They'd each be cheaper. Now, the leak itself, it came from a memo from JP Morgan. Basically, it was advising some of their clients of a future corporate action with Tesla, and in it, it did say 20-1 stock split. So even though I say take it with a grain of salt, it's not a bad place for a rumor to be true if it comes out of a memo from JP Morgan. So it could be true. However, once again, it's not being voted on until October, and a lot can change between now and October, and the board may not want to go for a 20-1. Now, the last stock split that Tesla did, it was 5-1. But funny thing is, the price still rose back up really fast, and that makes me think that a 20-1 is really not out of the question, because that's one of the things they want to do is they want to make their shares a bit more accessible. Now, they're totally accessible to us with Wealthsimple because we can buy them fractionally. But still, I think that's kind of what their main goal is to do this. Now, keep in mind, if you're holding Tesla on Wealthsimple fractionally, and they do a 20-1 split, so if you had half of a Tesla share, well, you would then end up with 10 Tesla shares after the split because you get a half times 20, so 10. So that's kind of a cool thing. So I do think that there is some truth to the rumor, and I think it'll be very interesting to sort of see how this is all going to roll out when it comes to Tesla. Okay, so that's our Elon Musk news of the week. I'm almost expecting this week to have an Elon light week, but it's hard to say when it comes to Elon. He is, well, Mr. Red Taco last week called him bananas, and and well, yeah, he's a little bit that way, but it's going to be interesting to see if anything else happens this week. All right. Wow. I don't think we have chat's being a little quiet today. So the way I've got this set up is we're supposed to talk about these issues in between each issue. But if y'all don't want to talk about them, we can always move on to our next issue. So the next story The next story is all about the earnings calls. So we had a lot of earnings calls come out this week, and the ones I'm most concerned about were the big tech ones. So we had winners and we had losers. So let's talk about the winners first. So our winners of the week were Microsoft, and Microsoft, they ended up beating the quarter. So they ended up beating all of their expectations in the quarter. So it was very, very cool. Apple did the same, and Apple did so well, they actually raised their dividend by 4%. Now, we're not talking about increasing the yield by an additional 4%, but 4% of whatever the dividend was before this. Another company, too, that outdid their expectations was Meta, which, considering some of the trouble they had and some of the negative share movement they had earlier in the year, that one actually surprised me when they beat expectations. So those were our three that beat expectations. Now we had two losers. Now the losers were, well, first of all, Google. Google did not do very well. They came in under their expectations. Now Google will be fine. Obviously, their expectations, they didn't come in that far beneath them. But then we get to the big loser of the week. The big loser of the week was, well, we all know who it was. It was Amazon. Amazon had a net loss of $3.8 billion. That's billion with a B. So Amazon did absolutely dismally. Now, a part of that, of course, is their involvement with Rivian. That was a big mistake. And as well, with supports and things like that starting to end, we've now got a situation where Amazon is not getting as much through fare as they were getting before. But I think Amazon will bounce back. Amazon is kind of one of these one of these companies. They've got deep pockets. They kind of got a good plan. And I think that once things settle down, once we get past through tax season, and we're mostly through it, I think that's going to turn things around. I think Amazon will have a much better second quarter. Now, and we got Drunken Midnight Adventures in there. Hey, all. So I think what's really interesting about the whole idea is that even though we had winners, even though companies like Microsoft and Apple did really well, they still lost stock value. And that was partially, there was a big, towards the end of the week, tech took a heavy hit. A lot of stocks took a heavy hit. The whole S&P took a heavy hit. It hasn't been rosy ever since they leaked, ever since the Fed leaked about the tax increases, the rate increases coming here in May. Well, we're in May now. I think it's in another week, roughly. So that's been really impacting things. Normally, what's interesting, a couple of days after these type of, bad news type situations, the market starts to bounce a little back. But this time it hasn't. It's been a little bit struggling. So I'm sure a lot of you have seen red in your portfolios. I think some Canadian stocks, though, are doing much better than their American counterparts. But, it's still one of those things. So, wow, that was fast. I'm going to have to start bringing like 10 topics as we got through the three main topics. But anyway, so that's all fantastic. How are you guys doing? I know it's a Sunday afternoon. It's totally a different kind of stream compared to nighttime. Nighttime, it's a bit more, I don't know, it's just a bit more laid back, I think, because it's night. So, this is good stuff. I really love this bubbly. So bubbly orange tastes just like Orange Crush, and it's got no calories. It's just water. So anyway, we're not sponsored by bubbly. I just felt like doing that. which is cool. All right. So now that we are out of our topics, what do you, if you guys got something you want to talk about, just throw it in the chat. We'll do that. Otherwise, I'm going to sort of dig around in my mind and come up with something interesting, or perhaps not. It's hard to say. It could be one or the other. Let's see here. All right. So I know we've been talking a lot about inflation. We've been talking about just different ways to try to sort of cope with it. One of the things too that I've been sort of thinking of is where we know inflation is coming and we know that it's not going to stop anytime soon. This is probably a really good idea to start looking at some of these bulk buying situations. So for example, you could, oh, hey, Riley. Riley loves the schedule change. Yeah, me too. It'll be a little bit, I'll take a couple of weeks to get into my groove, getting used to a Sunday afternoon, and for people to sort of realize, oh, we need to be here Sunday afternoon, not Saturday night. So, but yeah, cool. So bulk buying. I think bulk buying is definitely a smart thing right now, as long as it's a non-perishable. So, you know, especially if you see these deals like Costco, if they've got something on sale, buy a lot. You know, really buy a lot. Not saying we need to create a new toilet paper issue, but you know, here's the thing. You know, you're going to be using toilet paper, and if it's on sale, you might as well buy a fair amount. Canned goods, things like that. And one of the things Nate Polmateer is always talking about, he buys a whole cow. And you know, now like they don't like give him the full cow. Like the butcher actually cuts it all up into pieces for him. But now you need to have, yeah, bulk buying is not panic buying. I mean, if you think about it, bulk buying is just smart buying. If you're a bit of a minimalist and you really want to make your dollar go the long distance, bulk buying has always been a good thing. Yeah, panic buying is where you go and you fill up a U-Haul with toilet paper and you know, completely clean the place out. I know myself, well, with coffee, I bulk buy my coffee if I see it on sale. Like I like, I'm weird. I like instant coffee, and so I like my Maxwell House original instant coffee. Normally, it's about $5 over at the Walmart, but so every so often, shoppers may throw it on for like $3. So it's like, you know, you're saving $2 a bottle. So if I see it on for $3, I have no qualms going in and buying 10 bottles because that's going to last me a while. So, and you can't beat saving all of that money. So that's one of those fantastic things about that. But also with a recession coming, you want to, you know, or whether it's coming or not, you know, because I know that Lily has a different opinion. But with inflation, more or less inflation, I mean, you know that things that you're going to buy today for $5 may be $6 tomorrow. So, you know, if you've got, and especially if you have the room, like if you've got a pantry or if you've got an extra freezer that you can freeze some stuff in, then absolutely do it. But here's a warning when it comes to freezing things. Pay attention to what you're putting in your freezer. Now, my mom is great at freezing things, and she's great at completely forgetting about them. And I have seen her throw more meat out because it's all freezer burned. So you need to sort of, when you're looking at freezing a bunch of stuff, try to be organized, like label it with some dates. Make sure, for example, if you're going to have some chicken and you're pulling it out of the freezer, you pull out the oldest piece of chicken. Don't just pull out the one you bought last week. You know, and that way there, because you don't want to be wasting food when we're dealing with the level of inflation, and especially if we got food shortages coming. You really, really want to be doing it wisely. You want to be making sure that you that you basically cross every I, that you become as organized as possible. Now, Lily mentioned a vacuum sealer. So yes, a vacuum sealer is a really great way to make your food last longer. They're small. They're also noisy, but they're a nice little investment. You can get a vacuum sealer. You can seal things up, throw it in your freezer, and it will. I could be wrong on this, but I believe it triples the amount of time that it will stay good in your freezer. But double check me on those facts because I pulled that one out of my butt. I remember reading something about it a year ago or so. And Riley says bought last should be put to the front first. Yeah, absolutely. Absolutely. And that's exactly what you should be doing. And hey, SM, it's nice to see you. Yeah, I know that you have not been able, you're one of the people who have not had the opportunity to drop in as much as you'd like on Saturday night, but now Sunday afternoons, it makes it nice and easy. So kind of cool. And SM is one of our, one of my favorite folks because he's nice and young and he's basically learning all of this when we all wish we kind of knew, especially with the finances and all of that fun stuff. And all right, Lily says, go back to the earnings reports. Do we think that the lower numbers are 22 supply chain issues, or is that due to inflation, or is there another reason? All right, well, let's talk about Apple. Apple has come out and said they know that they're in trouble because of, well, supply chain issues and shortages. So Apple's at that point where they're struggling to get chips. And well, when you can't get the chips and you sell things with chips in them, that means that your sales are going to go down. And Apple has already said they're probably going to have some bad numbers for the next quarter, maybe a couple of quarters, because of just the delays. Like right now, they have the new studio out. And I was looking at it the other day. And if you ordered one today, you're lucky if you can get it by August. It's kind of gotten that bad when it comes to some of these, and it's not just the chips. You have to sort of look further back. It's not even so much the chip manufacturers, it's that the chip manufacturers can't get the materials, the metals that are used in those chips. Everything from gold to nickel, and there's a lot of different palladium. There's a lot of different things that go into chips. And so there's all of these issues getting all of this together so that they can get it's kind of like, if you remember when you were in school and you learned about the web of life, how everything is all interconnected when it comes to species on the planet. Well, it's the same way when it comes to technology. Everything is interrelated. You can't make and sell computers if you can't get chips. Chips can't make chips if they don't get the raw materials. So we got a whole lot of these things that are happening, and it's all sort of coming together to a giant head. So it's going to be interesting to see, because we are going to see some companies, like Apple, for example, are going to have some issues, and they've acknowledged it. And, hopefully, it's one of those things, like I said earlier, when it comes to this inflation, like raising interest rates isn't going to completely fix inflation. What we need to do is we need to address the issues. We need to address the supply chain. We need to address some of the general shortages, labor shortages. We need to get all of that resolved to be able to truly fix the issues that they're running into right now. Lily says, how would you recommend people approach their investing strategy in changing it? Well, when you start to move towards a recession, one of those things I start looking at is I really like to start looking at some blue chip stocks. I really start to right now it's nice, like with some of the high passive income dividend stocks that are out there, they're fantastic. You can get a nice amount of passive income flowing into your account. That's wonderful. However, here's one of those things. People sometimes get blinded by the passive income because it's a now thing. Problem is, a lot of these really big passive income companies, they're not going to do as well in a recession. So that's when you have to start thinking, okay, well, maybe I want to start scaling back a little bit, looking at some of the more recession-proof companies. Now, I did a video recently on CNR, so Canadian National Railway, and they're fantastic. They're a fantastic recession-based company. They are, for one, they're a key part of our supply chain. So, oh, frog in the throat means water in the throat. So yeah, they are a supply chain. They're an essential part of our supply chain. They're also essential when it comes to hauling. Like most of what they haul is going to be stuff from industries, stuff from mining. A lot of these northern mines, you know, CNR is the one pulling all of that stuff out of the north. The Canadian government in their last budget, they earmarked a whole bunch of money to try towards that industry because they want to be providing a lot of these minerals and taking advantage of the situation that the world is in. And CN is going to be very crucial to that. So recession proof, yeah, absolutely. CN is one of these stocks that you can buy it and you don't even have to ever look at it if you don't want to. Now, mind you, as well, they do have dividends. They just don't have a lot of dividends, but when you combine their growth and their dividends, you're looking at about a 25% total return on your investment. So that is really, really good. Plus, you don't have to worry about them too much. They are a dividend, and their dividends, they're a dividend aristocrat. So they have been increasing their dividends for 26 years in a row. So that's absolutely fantastic. Even this year, between this year and last year, I believe they were paying 63 cents a quarter, and this year they're paying like 70 something. So they're not just, some companies will just, increase their dividends a little bit to keep their dividend aristocrat. Not CNR. They've been putting a lot of money into it. So they're absolutely a great stock. So I would recommend that people start looking at stocks like that. Do your research, of course. But CNR is a great stock. There's also some of the banking stocks have half decent dividends and growth. So you need to start looking at it, I think, from that perspective, because instead of looking at something that gives you a 10% dividend, but it doesn't really grow much. Well, that 10% is nothing compared to a stock that's going to grow and give you a dividend. Now, even in a recession, you're still going to see, I think, some half decent growth on things like, things like CN, for example. So you want to look at businesses that are still going to be functional during a recession. Now, I don't want to talk too much about it. I'll tell you why. I do have a video that's dropping tomorrow. And I filmed it today, and I'm still in the process of editing. But it's part of a two-parter. So the first part is Canadian stocks. So basically, I've said, let's build a portfolio of only 10 stocks, Canadian, to try to create some diversification and recession-proof. So that's what I've come up with. I've come up with 10 of my Canadian picks. So basically, 9 of them are from industries, and one's a wild card. So we got that, and that's coming out tomorrow. Now, what's going to be interesting with this is that I'm going to pay attention to these stocks. So I don't have room right now to do this, or the finances, quite honestly. But what I'm going to do on papers, I'm going to purchase $1,000 of each of these stocks, and I will keep track of it on a spreadsheet. I'll keep track of everything. Any dividends that they have are going to be reinvested. And we'll keep track of the Canadian one for a year. Now, next Monday, so not this Monday, but the following Monday, I am going to do the exact same thing, but with the American market and with all American stocks. And then I will have basically 2 groups, and I'll do the same thing. I'll set them up on the spreadsheet as well, and both of them will start officially today. And I would like to just sort of run the 2 of them together and see who wins. It'll be sort of like a grand battle royale between Canada and the US. Which portfolio is going to do a little bit better? So I think that'll be neat. And what I'll do is I'll do an update towards the end of each month. So towards the end of May, I'll do an update. Just I haven't figured that. I'll probably just be a separate video just to update them. And we'll just do this. We'll run it for about a year, and we'll see what we get. And I think that's just going to be, it's going to be really neat. And now if a recession actually does pop up in this year, that would be oh gosh, I don't want to get excited about a recession, but it would be fantastic in a way to sort of test these. And even if it's a situation where, you know, if towards the end of the year we start to go into a recession and we've already done the test, nothing's saying we can't just let it continue. So we'll that'll be up to you guys. That'll be up to the community feedback when it comes to that. All right. Now, SM Diecast said, I am so excited. I am hoping to start my investing YouTube channel this week. I've been wanting to forever. Well, you let me know, SM. You have your first, I'll be your first sub. I will jump in there as long as you let me know first. But I'll definitely jump in. I'll sub. I'll watch. And if you need any tips or advice, feel free to reach out. Mr. Red Taco says, anything that is under the sun that's made with a chip is going to have possible issues. Yeah. And here's the sad thing. That's almost everything nowadays. Your cars have chips. Heck, even some of your fridges have chips. I mean, it's going to be very interesting, to say the least. Raising rates is just kicking the can down the road, sort of speak. Yeah, absolutely. Absolutely. All right. And AC Dat says, Canadian Utilities is also a good one during a recession. Any utility for that matter. Absolutely. And Canadian Utilities, folks, is Canada's first dividend king. This year, they hit 50 years of consecutive dividend increases. So Canadian Utilities, dividend king. Next up on the list is Fortis. Fortis is at 48 straight years. So yeah, definitely. I won't tell you if I chose Canadian Utilities in this video. You have to watch that tomorrow. But I will tell you, they were, at the very least, they were considered, if not chosen, because they are a fantastic company. And they're actually, well, okay, we won't talk too much. I want to do a deep dive on Canadian Utilities, so I'm going to save it for that. Riley Max says, I'm pretty heavy in equities with rising rates. With rising rates, I'm looking at adding a bond position to my portfolio eventually. Never thought I'd say that. And you know, that's not a bad thing. Adding bonds. Now, before, bonds were absolutely worthless, but they're starting with these rates coming up. Bonds are starting to look a little bit more viable. So yeah, absolutely. And SM Diecast, is Dividend King 50 years and Aristocrat 25? Yes and no. So Dividend King is 50 years here and in the US. So 50 years both places. But to be an aristocrat in Canada, it's 5 years. In the US, it's 25. So there's a bit of a difference that way. Canada also has this little thing where you can miss the first year. You can miss 1 year in that 5 years, but that's only initial to get in. But once you're in, you can't miss any years. So it's interesting. And these lists are, of course, updated all the time. So I do like a Dividend Aristocrats, and it's one of those things where a lot of times, if you've got a company that is high on the Dividend Aristocrat list, one of the fantastic things about that is that comes with some prestige. So you take Fortis, for example. Even if Fortis had a bad year, they're probably still going to find a way to raise that dividend because they don't want to lose that title. And Canadian Utilities, the only dividend king, that's like massive prestige for them. You know, they've got 2 years where they're sitting on the throne all by themselves. So they certainly don't want to lose that. And what's really interesting is, see, their parent company is called ATCO, and they are also an aristocrat, but nowhere's near being a king. So that's kind of an interesting thing with the whole ATCO Canadian utilities thing. So that's kind of neat too. So it'll be interesting to see. I'd like to see more of that happen in Canada. I think we've got a lot of great companies, and Canada is a market. To me, Canada is a fantastic market. I mean, I know I do a lot. Will say, don't ignore the American market, and that's true. Don't ignore the American market, but don't don't forsake the Canadian market for the American market, because there are great opportunities in both markets. And I've it's really funny in doing research for different videos. I have actually run into people from foreign markets doing videos about why you should be investing in the Canadian market, and I'm just like, yeah, you absolutely should. So we have a lot of great companies. We've got a lot of very stable. We got our stinkers as well as everybody else, but we do have a good amount of half decent dividend growth stocks, a lot of good hybrid stocks. So I'm pretty impressed, I think, with Canada overall and what we offer. I also do like the US, and it's one of these interesting things. One of my goals eventually is I haven't really dabbled into the European markets yet, but I would like to do that somewhere down the road. Just right now I look at it like right now between the US market and the Canadian market, I pretty much get everything I want. With the Canadian market, though, there are two sectors that are very not so great on the Canadian side. So one of them is healthcare. A lot of the big healthcare stocks are in the US. And it's kind of interesting. A lot of the big ways to make money in Canada with healthcare is usually getting ETFs that are using American healthcare assets, for their making money. Now, the other group is tech. So tech, most of the big tech companies are, of course, in the States. So Canada, we have a few big ones, but most of your real mega ones, your Apples and your Amazons and your Googles, those are all down in the States and the American market. And it's so much easy with, I think most of you guys are probably using Wealthsimple. Wealthsimple makes it so much easier now to basically be able to just get in there and, sorry, I was just distracted. I was putting up the banner just in case we got like that one person in here who's like, what? Wealthsimple? What's Wealthsimple? But Wealthsimple makes it very easy to invest. So you got Wealthsimple Plus. With Wealthsimple Plus, you get to create American accounts, and that is fantastic. I've got one set up right now on my RRSP because that's where I keep I keep my Apple stock there, for example. And it was just this morning when I got up, I had a notification that I had $1 come in from it was only $1 dividend for a company I just invested in not too long ago called Armor. It was just a REIT in the US, and it was like, oh, $1 USD. So that's like $1.30. So I thought that was pretty darn cool. And also, in addition to that, you of course have all of the fractional buying, which is great because almost everybody, if you've got really big stocks and you're a brand new investor and let's say you don't have those resources, because a lot of us when we start this journey, we're nickel and diming it. We're just pulling together or scraping together whatever we can. And fractional makes it really, really good because you can buy one stock, you can buy 1.5 stocks, or you can buy 1/100th of a stock. So that's kind of cool. So I like that. And that's a lot indeed. Yes, it is. All right. SM, the only problem with Canadian stocks is they are very weighted in banks and mining. It would be cool if we had some tech and growth giants here. Well, That is absolutely true. And there is there's one tech stock I think that I've got in tomorrow's video that you may want to just take a look at, because I would say they're a very interesting company. And believe it or not, it's not Shopify. So not Shopify. And Riley Mack says, very happy with Wealthsimple Plus. Yeah, me too. And the other thing too, Wealthsimple is about to come up with something called, I don't know what their exact name of it is. Basically, it's a venture fund via Wealthsimple. I received an email about it. So that's going to be interesting, because normally venture investing, you need a lot of money to do it. But it seems to me what Wealthsimple is looking to do is it's almost like bringing a fractional to venture investing. So it might be a situation where I think, and I'm not entirely sure, I have to see it. I haven't seen it yet. But I think what we're looking at is a situation where they're going to sort of pool, the users together to do some venture capital. So that would be kind of interesting. And right now, like I said, I only received a single email, so I have no real details yet. But I think that will be very, very exciting. And SM says, I saw that venture fund coming out. It sounds very exciting, although it will probably be very risky. Yeah, absolutely. And there comes. And here's the thing. I have a feeling that Wealthsimple, I think you're going to eventually start seeing options on it. I think you'll see options. I think you'll also see probably, just basic things like covered calls, things like that. I don't know about leverage. I think they're probably going to shy away from leverage just because of how dangerous it can be. But you never know. So that's just one of those things. Wealthsimple is, and this is what impresses me about them, is that they're a company that absolutely finds a way. Like constantly, they find a way to improve themselves. And a lot of times, I know many companies I've been involved with where I have my dream list of things I want. And, year and year will go by and I still don't have anything on my list. And with Wealthsimple, when I first signed up with Wealthsimple, a lot of my dream list, fractional investing was on my dream list. We got it. US accounts on my dream list. We got it. And they gave it to us with commission-free trading inside of it too. So I'm like, holy banana bread. I wasn't even expecting that. So I got more than I had hoped for. Now, venture capital, that wasn't even on my list. So they're giving me stuff that I haven't even asked for too. But I find it very fascinating. They're a company that they want to innovate. And if you've got a company innovating like that, they're definitely a company I respect, and I will certainly I'll probably be a customer for life the way it's going right now. So yeah, fantastic. All right. So we got about 7 minutes left. And yeah, they also have CDRs, as AC Dat says. So CDRs is kind of interesting. Because I've got the plus, I haven't really been using the CDRs so much anymore because I've just been buying and holding my stuff in my American account. But the CDRs are fantastic. And I'll tell you one of the things, the only downside to a CDR versus the actual stock could be the amount of volume. I always get worried if something doesn't have a lot of volume, that if I decide I want to sell it, there could be a delay. It's hard to say. I haven't run into any issues at all like that with CDRs, but it's just one of those things in the back of my mind that I'm like, okay, that's interesting. SM says, that's why I love to hold POW. So I love Wealthsimple so much to give up investing in them. Yeah, absolutely. So, POW, and here's the thing, Power Corporation of Canada, they're not technically Wealthsimple, but they are the largest shareholder of Wealthsimple. So, so there's that. They're also, POW is one of these companies too that it's always going up, and I think it's pretty stable. So I think it's I wouldn't say 100% recession proof, but Like I would probably still look at a company like Fortis or Canadian Utilities as being much more recession proof than, say, Power Corporation of Canada, but I still have a lot of faith in them. So they're definitely a good company. All right. And Rye says POW is heavy into insurance as well. Interesting ticker to own. Yeah, absolutely. And that's the thing. I mean, POW, I think, if you look at the innovation of Wealthsimple, and even though POW may be their biggest shareholder, I think you're going to see that there's going to be a lot of overlap in their ideals and the way they run things. So POW is, I think they're a very stable company. I think they're a very good investment. Um, I don't think you can go wrong at all with investing in POW, but keep in mind, I am just the beginning of your research. So you want to make sure to check that out with your financial advisor. But other than that, yeah, POW's a fantastic stock. So I would definitely go all in on POW. I've got no issue with them at all. All right. So we got about 5 minutes. If you guys got any last questions. All right. Algonquin Power. Yeah, Algonquin Power is interesting. I really loved Algonquin Power for a long time. Now, they had a little bit of struggles towards the beginning of the year. Well, it was actually the last year now that I think about it, but I've kind of moved a bit away from them. But I still think they're solid. I still think that I still think they have a lot of potential. I wouldn't put them on the same spot as I would put Fortis and Canadian Utilities and even Enbridge. I would put Enbridge above Algonquin, but I still think Algonquin is positioned to be around for a long time. And all right, Ryan says Candace is right, though. It's not even close to recession proof in comparison to some others. Recent performance is showing us that. Yeah, absolutely. And SM says I would never have over 8 to 10% in POW, but definitely it's a great company to hold. Yeah, no, absolutely. And when I say, and I just want to clarify, when I say all in, I'm not saying I would never go all in on one stock 100%. All in means that I have no reservations about owning POW. But keep in mind too, a lot of times too is your motivations for investing. When you're looking at something as a long-term investment, you're going to kind of analyze them a little bit differently than if you're looking at them as being more of a short-term investment. So that's one of those things. A lot of people sometimes sort of can think that investing is one rule for everything, but it really isn't. You need to sort of know when you start investing, you need to know what your time frame is. You need to know, like, for example, if you're coming in and you're going to buy some stocks that you don't need that money, or you don't need access to that money, you're buying it for a long haul. Well, in a case like that, as I mentioned earlier, when I was talking about CNR, they're a perfect stock for buying and forgetting. You don't even have to think about them. You know, you got your dividends coming in. You know that their growth is going to go up. You know that whatever the world throws at them, they're going to survive. So kind of interesting. Too much debt for my liking. Yeah, and that's part of what I was getting at with the AQN. They have a lot of debt. They did have a few issues. So they're kind of not on my top spot right now. So I don't own any. I used to have them. I will, full disclosure, I used to have them, but I did sell out of them because there were better options at the time. And SM says, very true, investing is different for everyone. Absolutely. I mean, you take somebody like SM, he's coming, when he hits legal age to invest, he's in that situation where he can look at a stock and say, okay, well, this is a stock I want to hold for 60 years or 50 years, whatever it is. Maybe let's say 50. Here's a stock I want to hold for 50 years. So he's got that opportunity that he can really, really capitalize on some long-term growth. Like if he buys a bunch of blue chip, fantastic stocks, he could pretty much sit on them and, they'll be worth a fortune by the time he retires. Like an absolute fortune. So that's kind of a cool thing. And I'm still really excited about your channel, SM. I can't wait to see it. That's going to be fantastic. All right. All right, so we're coming into the last few seconds. So just to let you know what's coming up, once again, tomorrow, we've got that 10 stocks Canadian version. Following Monday, 10 stocks American version. All of them are pretty much blue chip. And there's only 10. So how can I diversify with 10 stocks, blue chip? And then we're going to pit them against each other. So Canada versus the US, I think it's going to be fantastic. Coming up on Thursday, I'm going to do a deep dive on Enbridge. So that will be kind of cool. And well, next week we'll be back here again for this week. And I have no clue what's going to be on here next week because, well, it hasn't happened yet. So that, I think, is it for today. Thank you guys for showing up. It's really fantastic to see you guys here on a Sunday. And you know what? Let me know either over on the Facebook group or down below. Let me know what you guys think about the new Sunday time slot. Are you guys stoked about it? Because I know I certainly am. It's going to be, I think, a lot of fun. Yeah, and now I can finally leave and I can get rid of, sorry, Elon Musk's head over here. It's kind of creeping me out a bit. All right. Anyway, everybody, thank you for being here. I will see you guys again next week for another This Week. Take care, everybody.